If the answer is that an investor can expect to earn a return of 36.01% in 179 days, or an annualized rate of 74.42%, but with a risk-adjusted return of just 0.62% and an expected loss of 14.99% if things don't work out, then what is the question? Today, we're looking at the car crash that is 23andMe and the proposal by company founder Anne Wojcicki to take the company private for 40 cents per share. 23andMe is a personal genomics and biotechnology company best known for offering direct-to-consumer DNA testing kits. Founded in 2006 by Anne Wojcicki, Linda Avi, and Paul Cosenza, the company's mission is to help individuals understand their genetic makeup, ancestry, and health risks through their own DNA. The company went public in June 2021 through a merger with a special purpose acquisition company, VG Acquisition Corp., which was incorporated by Richard Branson, at an initial price of around $10 per share, which indicated a total market value of $3.5 billion. However, since then, the stock has steadily declined and is currently trading below 30 cents per share. Several factors have contributed to this decline, including slower-than-expected financial performance, cash burn concerns, and challenges in meeting Nasdaq's minimum bid price requirements. In November 2023, 23andMe received a deficiency notice from Nasdaq for failing to maintain a minimum bid price of $1 for 30 consecutive days, putting it at risk of being delisted. Despite launching new products and moving into areas like clinical trials for drug development, the company's stock price has struggled to recover. Analysts have revised their price targets down multiple times, reflecting a broader concern about the company's profitability and growth outlook. Anne Wojcicki was the driving force behind 23andMe. She grew up in the heart of Silicon Valley, where her mother was a teacher and her father was a professor at Stanford University. Anne attended Yale University, where she majored in biology. She graduated in 1996 with a Bachelor of Science degree. At Yale, she was actively involved in molecular biology research, which laid the foundation for her later interest in health and genomics. After college, Anne started her career as a healthcare investment analyst, focusing on biotech companies. This experience provided her with deep insights into the healthcare industry, particularly in how health data and genetics transform personalized medicine. However, she became frustrated with the traditional healthcare system's inefficiencies and lack of emphasis on preventative care. This dissatisfaction motivated her to explore the idea of empowering individuals with their genetic information. Anne co-founded 23andMe in 2006 with Linda Avi and Paul Cosenza, driven by her vision to democratize access to genetic information. The company was named after the 23 pairs of chromosomes in human cells. Anne's goal was to give people control over their health data and help them make informed decisions about their well-being. The company initially faced regulatory hurdles from the FDA, which temporarily halted its health-related services in 2013. However, 23andMe worked through these challenges and obtained FDA approval for various genetic health reports over the years. We mentioned Anne was from the heart of Silicon Valley. One further example is that she was married to Sergey Brin in 2007, yes, the co-founder of Google. Interestingly, Google was one of 23andMe's first and biggest backers. In 2007, Google invested $3.9 million in the company as part of a larger $9 million series of funding round. Other venture investors included New Enterprise Associates and Gene Tech. Oh, and just to note, a sister, Susan Wojcicki, is the CEO of YouTube, which bodes well for the success of this video. At its peak, 23andMe reached a significant size in terms of both valuation and customer base, with a market value of $3.5 billion and in excess of 12 million customers using its DNA testing services. The company also formed a partnership with pharmaceutical giant GlaxoSmithKline in 2018, which leveraged its genetic data for drug discovery. However, not all has been rosy, and the company has been embroiled in several issues. 23andMe holds one of the largest private DNA databases globally, containing genetic data from millions of individuals. Although the company has strict privacy policies, questions have arisen over how this data is shared with third parties. 23andMe has partnerships with pharmaceutical companies for drug development, raising concerns about the use of personal genetic data in ways that customers may not have fully anticipated or consented to. The increasing value of genetic data has also made the company a target for cyber attacks. If hackers were to breach 23andMe's database, the consequences could be significant, as this data includes not only personal information, but also insights into an individual's health risks, ancestry, and genetic makeup. There are concerns about whether 23andMe has robust enough security measures to protect such sensitive data. Ethical concerns have also been raised about how genetic data could be misused. For example, health insurers, employers, or other entities could theoretically access genetic information to make decisions about insurance coverage, employment, or other services based on a person's predisposition to certain diseases, even though such practices are currently regulated. Additionally, there are also concerns about future legal and ethical uses of the database. While 23andMe allows customers to opt out of certain data sharing programs, the complex language of privacy agreements makes it difficult for consumers to understand how their data might be used in the future, especially in research or government investigations. The accumulation of these issues, compounded with increased competitive pressures, has had a significant adverse impact on 23andMe. The company's stock has fallen by more than 97% since its initial public offering, and there have been boardroom bust-ups. In July 2024, with a desire to take the company private to consolidate control, allowing for more flexibility in its operations without the pressures of public markets, Anne Wojcicki offered to buy all outstanding shares not already owned by her and her affiliates for 40 cents per share. However, a special committee within the company rejected her proposal, citing that it wasn't in the best interests of shareholders who were not affiliated with Wojcicki. This rejection has led to the company exploring other alternatives to enhance shareholder value, including considering external takeover proposals. While Wojcicki's proposal was the most prominent, the rejection of her offer suggests there could be interest from other parties as well, as the company navigates its options for restructuring or selling parts of its business. However, no concrete offers from other companies have been publicly disclosed. With a lack of competing offers, Wojcicki tried to push forward with her goal of taking over the company. This resulted in a significant board shakeup in September, when 7 independent directors resigned en masse due to strategic disagreements with Anne Wojcicki. These directors expressed frustration with the lack of a fully financed proposal from Wojcicki, which had been anticipated for months, and included the departure of Silicon Valley luminaries including Roelof Botha, Patrick Chung, and Neil Mohan. They'd felt that continuing on the board would only prolong conflicts, given her concentrated voting power, and they saw no progress in negotiations. Despite their departure, the directors emphasized their support for 23andMe's mission and accomplishments in genetic testing and personalized health. With a net worth estimated at $500 million, against a proposed purchase price of $200 million, and voting control of approximately 49%, Anne retains effective control of the company. The pertinent question for investors looking at this proposal and considering if they should buy 23andMe shares at 29 cents, with a view to selling at 40 cents, is whether she will be able to complete the deal and generate them a 36% return, or if it will fall apart and cost them a likely 15%. So, what does everyone think of this deal? Let me know in the comments below, and don't forget to like and follow if you found the video useful. Be aware that all the figures mentioned are at the date of my calculations and will change in line with the share price, any changes to the deal terms, and the duration to close. As always, this information is provided for educational purposes only. You should not consider anything in this video to be investment or financial advice, nor a recommendation or endorsement to buy or sell any financial instrument. You should always conduct your own research before considering any investment and seek independent financial advice. Thank you for joining me today, and until next time, have a great day.